Welcome back to the channel. Crypto Trend Trader here. Today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have the Bitstamp chart, and I'm on the 4-hour currently. And as you'll see, we are getting ready to come up on our weekly close. We've got about 20 minutes until it happens. So what we're going to do, we're going to switch over to the weekly time frame. Because that is the longest time frame candle that is closing the soonest, so that's going to make it the most relevant. And now just kind of glancing at this chart, what it looks like is we had a violent sell-off, kind of like calm down for a minute there, and then continue to sell off violently, kind of calm down there for a minute. And I'm just looking at the volatile explosion here, and now we're basically getting the same thing here. We had gotten a sell-off, the blue crossed below the orange on the VPCI, then the blue got above the orange on the VPCI, and then we started to sell back off again. So what it looks like is getting ready to happen is it looks like the blue is getting ready to sell back off, and it's going to cross back below the orange if we don't strengthen to the upside soon. And then the TJD on bounce volume is basically strengthening to the downside. There was like a small move back up that turned the line blue, but at this point in time, the slope is strengthening, so I would expect continuation. And then just looking at the actual chart for candlestick analysis on the weekly time frame, what it looks like happened is we basically came up above here, formed a strong support line, consolidated in this area, kept moving about, came back down to it, found support, tested the support, and found a strong rally from it. And then the rally was faded, came down below the support. Now we're below the support. We came back up and retested the support that we broke down from, which is referred to as an SR flip, support resistance flip. So we had this area as support for this entire time frame, and now we are finding it as resistance. So now with the 20 minutes coming up here, I would expect the candle to close under 77.53, or at least in between 7,500 and 77.53, anywhere in that range. And we've essentially, we have that SR flip confirmed. And what I would expect to happen is, possibly a test to the upside to get faded and just leave a wick basically, followed by a body continuous sell-off to the downside. And what that's essentially saying is we fell down below our support line here. We tried to test back above it. The market rejected the test, and then we got continuation to the downside. In the event that we do push to the upside and we find ourselves above that support resistance area of 75 to 7,700, if we do close back above that in the next week, or even this week in the next 16 minutes, if we shoot up like $250 or something like that, it's possible. If that were to take place, that would change my mind, and I would still consider this area to be as a support zone, and would expect a retest of the top of the range from there. And then if we turn on, man, this chart is just hard to even look at. I'm getting ready to just delete all this and start over. Looking at the daily, we're not getting a ton here. We are getting positive momentum to the upside. Even the range is just still staying true that we've been discussing this whole time. Basically the top of the range is this 7,800 essentially. Bottom of the range is basically 7,000. So it's just like a 10% area we're moving around in. We had formed this little support line, diagonal trend line on the way up, and then we were also sort of finding this diagonal trend line on the way down. And now, although we've broken below this right here and then came back up, tested it, and found resistance, we're now actually this is our third test of the diagonal downward sloping resistance line. So at this point in time, it looks like essentially a battle between these two trend lines emerge, and we got pushed back down to the downside. So it looks like what's about to happen here is it looks like we're about to get rejected again and then sell back off. And since we already sold back off almost to the 382 off of the 786, what I would expect to happen if we get rejected at a lower high for the 1, 2, third time, what I would expect to happen, or second time rejected at a lower high, but the third high that's consecutively getting lower after this past one. What I would expect to happen right here essentially is for us to come down here to the yellow 382 or the blue point 0.5 at 73.65, or the next according fib level 72.50, and essentially retest there and then attempt to move back to the upside. But at this point in time, from this push up here, we failed to make. We have a lower high from there, from there, and then even from this move right here, we came back down. We put in a higher low, but then look, we put in another lower high off the swing right here. We put in a higher low, which is good, but then look, we're putting in another lower high. In my opinion, any strength that we were starting to exhibit here, was basically dissipated by the massive sell-off. And then all that happened is, basically like price has just been slowly floating up, but nothing has changed. I'm not sure where this price action is coming from, because to me, all this looks like is just the oscillators resetting. Because there's no follow-through on any of these moves. And matter of fact, if you want to call it follow-through, the follow-through is, every time the price goes up, we immediately follow through with, either a massive sell-off or continual sell-off. So what I would expect to happen right here is essentially just put in another higher low and then sell back off. I'm not ready to get bullish on this thing by any means, and we may not even make it up, as high as I was expecting before our next rejection. But it looks to me, just like we said, like we essentially broke below a key support zone, and now we retested it as resistance. And what's most likely to happen is, continuation to the downside until something changes. And as far as things changing, based on the chart and the technicals and everything right now, there's no indication that anytime soon anything will be changing in the space. What I would expect is every large move to the upside to be sold into, and every move to the downside to essentially, every bounce after a move to the downside to become less and, less pronounced until eventually, we do capitulate to the next level and, potentially find a reversal point at our next support zone. But at this point in time, the reaction that has been taking place in this area is not what I would expect to see, or what I would hope to see. We could still be potentially putting in an Adam and Eve double bottom, though. That's what this essentially looks like to me. We basically have come down here. That's our Adam, okay? And then we form this resistance line right here, and now we're putting in the Eve. So if we can move up essentially and break through this 77.80 range, if we can get above the 70, basically 7,800, and get a confirmed candle close on even a 4-hour with any kind of volume, any kind of follow through, I would get extremely bullish on this asset, because that would be us essentially, a lot of confluence. We would be breaking out of the Adam and Eve double bottom pattern, with a potential move to the top of the range up at 9,200. We'd be closing above our our heart line of our downward sloping channel, and then essentially we'd be moving back on top of our moving averages, and potentially this will be in line with our indicators, and we could essentially begin moving to the upside by taking out this previous high after we put in the swing low down here. So essentially, when that happens, if we can get above the 78, 7,900 range and close with a new high, we're taking out that previous micro swing high. So we put in a lower, a low, a high, a higher low, and then if we could put in a higher high right here, we could be potentially reversing the trend on the micro and move to the top of the range, and then depending how we get the reaction from there, at least we would be getting our next attempt to basically break out of this range that we've been trapped in since June basically. So we've tested the top of it 1, 2, that's our third time right there, our fourth time. So if we could get up here and test it for the fifth time, maybe we get rejected again, but maybe we break through this time and we get that bullish move to the upside. But now looking at this, it's just as likely that we get a smaller bounce here, we find resistance there, and then do continue selling off to the downside. But at this point in time, I think we're at the bottom of the range, so there's a lot of potential for us essentially to get that move to the upside. And even if we don't break out of the range, it's definitely a very profitable potential trading range that could see. Let's take a quick look. we could see essentially like a 20% move to the upside, which would be the second target right here. But even if the first target, is filled right here, at over a 2-to-1 risk reward, that's still a 12% move. So, depending on how you trade and what leverage you use and et cetera, it could be a very profitable trade at, very little risk. And the beauty of something like this is that it's very easy to manage risk off of a situation like this, especially when we're interacting so strongly with our Fibonacci's, because it's clear when your theory is incorrect. And same thing goes for moving averages. Like when you see the price interacting with moving averages consistently, it's very easy to manage your trade off of those moving averages, because the moment that those moving averages are no longer functioning in the way that they have been previously, that your trade is invalidated, and you can potentially just look for a different setup. But in the meantime, when you see something consistently finding support on a moving average, there's no reason not to be buying, or if it's resistance, and in the sense selling that moving average every time until the time that it doesn't. And then again, you just manage risk off of that specific point, and it makes it very easy. The difficult part about this is not picking the direction. The difficult part is picking the area to manage risk off of, for most people, because they end up managing risk off of a terrible spot. I think most people, when they buy or sell, typically do so in the middle of a range and end up at least in an upside down position, more often than not, because they bought the middle of a range. And typically that's because of FOMO. It's people rushing into a trade because they're afraid that they're going to, that price is going to reverse before they get into the trade. And one of the most important things that I ever learned, in trading, is you let price come to you, and if it doesn't come to you, you just move on and it's time to look for the next trade. But if you chase price, you will always end up losing. So, well, there we have it. Little wisdom, little TA, Bitcoin technical analysis. As the weekly close comes to an end here, we will see how this plays out. And, as we get closer and closer to Christmas and the end of the year, how Bitcoin is going to print its yearly candle as well. So, Crypto Trend Trader, signing off.